In today's video, we're going to discuss how you can finance your deals and flips like a pro. I'm going to be covering every single financing option that's available out there for you. Make sure if you have any questions or anything that you didn't feel I covered, make sure you drop a comment down below. And if you need more help and you want to get started flipping, wholesaling, buying rentals, whatever strategy you'd like to learn, my suggestion is you book a call with my team. We offer one-on-one coaching, which is our elite level coaching, and group coaching. You get direct access to me and the other coaches so you can get your questions answered in real time. In today's video, we're gonna get into all of the loans that are available out there for you as a DSCR loan or you as a flipper. You're gonna learn how to do flips just like I've done on over 700 transactions all throughout the country and helped many of you in the past 3 years get your first flip, second flip, third flip, fourth flip. Lots of students are on their way to millions and have made hundreds of thousands of dollars using this exact same method. I also want to point out that cash is a way to get financing, but when I first started, maybe just like you, it wasn't an option for me. And most investors can't use cash unless they're tapping into a HELOC for a home that they own, using an IRA, self-directed 401k, self-directed IRA, or borrowing money from private sources like their mom, their dad, or other friends, family. We'll focus on accessible options like my go-to hard money lender, Kiavi. They fund in 49 states, and I'm gonna hook you up with their link in this video. The cool thing about Kiavi is once you get a rhythm, you don't have to put any money down in your flips. Like zero. Most of the deals that I do with Kiavi are 100% financing, meaning that I barely have to come up with money for the closing costs. And if you're using a private money lender, you could actually have no money into the deal, or you could use a credit hack and basically use your credit card to put no money down on the deal. So there's all sorts of ways to put no money down on the deals. So grab a pen and let's get ready to fund your deals. All right, so let's go through Kiavi. The hard money lending is almost the best way to go. It's not the best way to go, but it's almost the best way to go. So usually on your first deal, they're gonna require you put 25% down and that you have an LLC. So if you're planning on using them, my suggestion is go get pre-qualified right now. They're probably gonna tell you to set up an LLC if you don't already have one. It's gonna be based on your personal credit, but they're gonna give you a line of credit between 1 million, 2 million, 3 million, 4 million, 5 million, maybe even $10 million. I know many of our students have had $3 million lines of credit basically that says you could fund up to this many deals. It's pretty cool. And the cool thing is they finance both the purchase and the repairs. And I wanna be clear about this. If I'm doing 100% financing or you're doing 25% or you're doing 10%, you could do basically 100%, 10%, or 25% is kind of how it works. And if I'm financing that, I'm not gonna put any money out of my pocket because they're gonna finance all the repairs. But what I will have to do is pay for those repairs up front. So make sure when you are financing those that you do front load your repair costs, because you do have to lay out the money up front. And when I say front load, let's say your demo is going to cost you $2,500. You may want to say it's going to cost you $4,000, so that's the last time you reach into your pocket for money, because you do have to fund the rehab. They're going to reimburse you once it's complete. Generally, the terms are between 10 to 13%. Right now it's around 12. It's interest only, which means you're only paying interest. You're not paying any principal down. It's generally 1% to 2% of the loan cost. That's points. So if you're getting a $200,000 loan, that's gonna be between $2,000 to $4,000 of cost. And the term is from 6 to 12 months. I recommend 12. Just for all intents and purposes, so you don't have to pay any more loan costs. Unless for sure you know you're in and out of the deal in 6 months. My second favorite source is local banks. Okay, now let me be very clear here. When you're using a local bank, number one, you want to talk to the commercial lending division. When I first got started, this was very confusing to me because you go to a local bank, you say, I want to get a loan for a house, and they're going to put you in the consumer lending division. These are very different things. When you're flipping properties, when you're buying properties for investment purposes, which Kiavi also does, that's called a DSCR loan, which is a debt service coverage ratio loan. They're looking for a debt service coverage ratio of at least 1 0.3, and you don't need to actually do the math. I've never have had to. You just have to make sure that it's profitable and you're cash flowing. So the reason that you want to go to a local bank is because you're going to be able to build a relationship. They're going to finance you just the same way a hard money lender looks at things. The way that the hard money lender looks at things is they look at it. Okay, what's tomorrow's value? What are you getting it for today? How much is it going to cost you to repair? And then they're going to do an appraisal on it based on what you tell them it's worth, and they're going to verify that if you actually know what you're talking about. So they're going to do their own independent appraiser, both the local bank and the hard money lender. In my example here, Kiavi, there's a lot of different hard money lenders. There's many of them. There's Pima One Financial, Dominion, there is Anchor Loans. There's a whole bunch of them online. All you really have to do is Google. My suggestions is you stick with the big dog, and that's Kiavi. For local banks, I'm looking for a bank that has 1 to 5, maybe a few more locations. Someone that I can reach across the desk, say, hey, who's in your commercial lending division? You know, that is going to be the best way. So what I would do is look for local banks. I use one here locally in Kansas City called Great American Bank. I use one in Vegas called First Savings Bank. I use a pretty decent sized one in Mississippi called Community Bank of Mississippi, and they probably have over 100 branches. That would be a large local community bank. Somewhere in that range, you'll find something. If you're in Green Bay, Wisconsin, just go and look for local banks in that area. You're gonna know who they are. They're all over the country, in your region. There's so many different banks out there. You might have a one-off location, and those are perfectly acceptable. You're gonna be able to talk to the decision maker. The main thing is make sure you're going to the commercial lending division. This is not a consumer loan. Big difference. Now let's talk about some home buyer loans that will allow you to flip a property using these home buyer loans. These are all consumer-based loans, so they have different credit restrictions. They have different requirements, and they're usually harder to qualify for. But I want to go through them one at a time. The first one, and probably one of the best ones, is the VA loan. The VA loan allows you to borrow money for repairs, buy a property as your primary residence, and sometimes a secondary house, and they allow you to get repair money for that. It's all based on your DD-214, so you obviously have to be a veteran or a family member of a veteran that qualifies. There's a few restrictions in there. Definitely look them up. I'm not a lender, but I know that it works in certain situations. Like if you're a decedent of somebody who was injured in service, you could qualify for a VA loan. That's a 0% down loan. It's a great way to house hack. You could go say, hey, you know what? I'm gonna buy this property to move into. I'm gonna go do the repairs, and all of a sudden your plans change, and now you could sell the property, or you could do a BRRRR and refinance your profits out of that property. So it's a great way to get started. Another 0% down option is the USDA loan. The USDA loan, the United States Department of Agricultural loan, is another 0% down loan. The cool thing is you'd be surprised what qualifies for eligibility in the USDA loan. I'm gonna put the link right here. And if it's in a rural area, you can qualify for 0% down loan and repairs for your property for 0% down. Another loan with a low down payment or no down payment, depending on how you structure it, is the FHA loan, which stands for the Fair Housing Authority. The Fair Housing Authority was established after the Great Depression. FHA loan is little as 3.5% down. And they also have the 203K option, which allows you to get up to $35,000 at the time this video was shot in repair money for the house. Now, generally, it either has to be your primary residence, or if you already have an FHA loan, it has to be a house that you're upgrading to. Your plans can change, but you do have to look at all of the language in there and play it conservatively. It doesn't mean you can't refinance it and do it as a BRRRR. It doesn't mean a lot of things. All I'm telling you is these are options, but you need to make sure that you consult a mortgage professional, a banker, or someone who understands it, and definitely read all the fine print. But this is just a hack. On my first property, I bought it with a loan like this, and I moved into it. I did the work, and I stayed in it. And about a year later, I sold it for $100,000 profit. So you can always move into it, do the repairs, not do the refinance, move out of it, sell the property, keep the profits. There are sometimes loan restrictions for how that you have to own it, generally at least 6 months to 9 months, depending on the bank and depending on what the underwriting guidelines are. So make sure that when you go in to get that loan, You say, well, what happens if I sell it in 6 months? What happens if I sell it in 9 months? They're going to give you the information, and then you can make your decision based on that. Another consumer loan is a conventional loan. A conventional loan usually means that it has underwriting by Fannie Mae and Freddie Mac. You can get it as low as 3% down, 5% down, 10% down, or 20% down. The only difference in all of that is your interest rate is going to be higher with the least amount of money you put down. And then after 20% down, your mortgage insurance, private mortgage insurance, is going to fall off. Means you're not going to have to do it anymore. With FHA loans, it has lifetime mortgage insurance, and I'm not sure about the other ones. You also have private money, like I said, that's using your friends, your family, or your 401ks. A lot of people do this through like, hey, I'm going to go get a commercial conventional loan. They require 20% down. I don't have the 20%. I'm going to use the private money to fill the gap. It's called gap financing, okay? So that's a great way for you to fund a deal with no money out of your pocket. Another way to do that is, you know what? You got the credit. I'm going to set up a merchant account, which means I set up a Stripe account or I set up a Square account under my personal name. I swipe my credit card for $20,000. I pay the 3% to get the capital, and then I have my down payment, and then I do a balance transfer. That's where you transfer the balance to another credit card at 0% down. Now you've got the money for the down payment, and you are in that deal for $0 out of your pocket. This is what a lot of new beginners do, but again, it involves risk. Make sure that you're comfortable that you're getting a fantastic deal and you're going to make money. Now let's talk about some creative financing options. You obviously can do seller financing, where that literally is you setting up whatever terms you and the seller agree on. You can use a combination. Let's say you've got a seller financing deal, they want $5,000. You use your credit card to get that down payment. You use your private money to get that down payment. You use your 401k to get that down payment. It's got to be self-directed. It's very easy to set up these days. You can just Google self-directed IRA, 401k. One of the best ways that I've gotten deals is subject to. Subject to means I'm going to take over that person's property subject to the existing mortgage. So that's a creative way of getting a creative financing. There's a lot of guys that talk about this exclusively. I've done this hundreds of times. It's not super complicated. You're just basically taking over that other person's mortgage without approval of the bank. So there could be a possible due on sale clause. I personally have never had one. I know people who have. So I think it's a safe loan, but again, you could be subject to a due on sales clause. I use these primarily when I'm doing a pre-foreclosure, where I'm buying someone's property that has an imminent foreclosure. I would then reinstate the mortgage, move the deed into my name. After I did that, I would start paying the mortgage. The 3 things I need for that type of loan is I would need not the loan, but to get that deal done, I would need a purchase and sale agreement, a letter of authorization, and then I would need to make sure that all that stuff got done within escrow so that I'm protected and that mortgage does not get paid off until then. I would change the mailing address with that letter of authorization to mine, and then I'm taking over their property subject to their existing mortgage. You could do it with judgments and other things like that as well. And cash, right? You can always finance with cash. You can get your cash from your HELOC, self-directed IRA, or your 401k, or you get cash from private money sources. Or if you just happen to have a ton of money, you can use your cash that way. So my recommendation is, not flipping with cash unless that's the only assets you have. Maybe you've got a bunch of stocks and you could borrow against your stocks, or you could sell your stocks and put it into real estate, which I think is a safer play. It's up to you, but you could definitely use cash. But if you're first starting out, chances are you're probably not going to have cash. So comment below. Which one do you think is right? Kiavi, FHA, VA, USDA, hard money, private money, subject to, which one do you like the best? Now, obviously, cash versus loans, you're always going to have, loan costs up front. They're going to charge you origination. They're going to charge you interest. They're going to charge you recording fees, a lot of other lender fees, lender's insurance, lender's this, lender's that. This stuff is not going to be with cash. With cash, it's just cash. You're going to have some fees, but not as many fees when it comes to getting a loan. That's how they make their money. Starting out, when I first started flipping, I used creative financing, actually. I was chasing pre-foreclosures, I was chasing other deals, or I financed it with a loan, right? And then sometimes I would use cash, but eventually you only could do a couple deals at a time. Once I was called by a hard money lender, this was the truth. I went to banks. I was trying to get all this financing. Just didn't really know what I was doing at that point in time. Finally, I had a lender call me up and say, hey, we see you do a lot of deals. I ended up working with that lender. That's Kiavi. And I haven't stopped since. They're a great lender. I've tried lots of other ones. They've been the best one. There are fees associated with hard money, but you can do a lot more deals, which means Two things. One, you can lose a lot more money if you're not analyzing your deals properly. Or two, you can make a lot more money. So let's go into approaching lenders. What do? First, you just want to walk into a local bank and ask for their information and then follow up with them. Ask to speak with their commercial lending division, someone in private banking. Even if you don't have a big private bank account, that'd be the best way. Hey, my name's Troy Kearns. I'm looking to talk to a commercial lender. My name's Troy Kearns. I'm going to be flipping a property. I buy real estate, and I'm looking for someone to do business with. Can I talk to one of your people and go tell them a little bit about yourself? Don't say, hey, this is my first deal. I've never done one. If you're in our coaching program, you can simply say, me and my partner have done hundreds of deals. That's me. I'm your partner in this. If you're not in my coaching program, you can just say, hey, go build the relationship. I'm a local guy. I work here. I work there. I know what I'm doing. I'm currently been doing a lot of research. The property's worth $200,000. I have it under contract for $100,000. It needs $20,000 in repair. Bring them a deal. With Kiavi, my recommendation is go to this link right now, go and apply, get your financing in order, and they're going to tell you what you need to do. Set up your LLC. Got to have this amount of credit, and then they're going to tell you how much you qualify for down. Then what you want to ask them is, hey, how do I get to 0% financing, or how do I get 10% down in financing? Chances are it's going to be deals. If you have a few deals under your belt, that's going to help you out. Private money, same type of thing. You're just going to need to build trust. You're going to have to start asking people, hey, would you like to make double-digit returns? Are you interested in investing with me? And by the way, if you are interested in investing in me and you're watching this video, we have a major deal coming up. We're renovating this exact building. By the end of the year, we'll be renovating this building, and we are looking to raise private money. If you're looking to earn better returns than you can in the stock market, we'd love to hear from you. All right, so now that you've learned pretty much everything you can about financing, just understand the only obstacle to you getting your first flip and your first financing is you finding a good deal. If you find a good deal, chances are you're going to be able to find someone to fund it for you. If you're out there and you're doing this on your own, focus on finding the deal first, because even if you don't find the financing, you're going to be able to wholesale it. My suggestion is, if you don't have enough money to put down, if you don't know what you're doing, start wholesaling properties and then take those profits and make those for your first flip. We have students making anywhere from $10,000 on their wholesale deal to $70,000 on a wholesale deal. So you can make a lot of money by wholesaling, okay? But you got to understand how to find a good deal. All right, so action steps. Make sure you contact Kiavi right now. Get pre-approved, or go to a local bank. My suggestion is go to Kiavi, because you're more likely to do it. It's a lot easier. Find one deal and then calculate the ARV using Redfin and our video on how to comp a property. Go show that deal to Kiavi and go show that deal to your local bank and shop them for the best rates. Thank you guys for watching that video. Whether you did not enjoy that video or you did, I definitely appreciate you sharing this video with a friend. I have been helping thousands of people online and hundreds of people in real life getting their first ever real estate deal. Real estate has changed my life, and if you want it to change your life, you can't just watch videos online. But if you are, make sure that you like, follow, subscribe, and share this video. If you got any comments, we'd love to make sure that we help you out in the future. If you want help, you want us to actually help you on your first deal, hold your hand getting it, help you get the financing, help you line you up with the right lenders, lay out the floor plan, help you do every single thing that you could possibly do, or help you get your first wholesale deal, help you get your first rental, whatever. My suggestion is click that link right now, go book a call with my team, and see if it's the right move for you. We have both an elite coaching program, which I have 1 or 2 spots available at any given time, which is more money, but it's one-on-one with me, plus a lifetime access to the coaching program and 6 months of our group coaching program, all the modules, all the documents, every single thing you need in one platform. If you're looking to get started and you have a budget, we have a group coaching program which has yielded a ton of success as well. You'll still have direct access to me, you'll have direct access to the other coaches, and you'll be able to succeed in a community of people. If you're looking to change your life and you're tired of watching YouTube videos and you want someone to actually hold your hand, book a call today. Tomorrow's not guaranteed. I hope to see you in there soon. Peace.